Happy Friday, everybody. This is Joe Cusick from the Cusick Group. Well, we had a bearish start on Thursday that soon gave way to a steady rebounding effort that cut into those market losses on Thursday. And it was very noticeable, the fashion in which that bounce happened. We had a bullish start today, but that's been basically backing off with some steady selling efforts that we see that are cutting into the market's gain. Spirited mostly initially by the bounce by the fact that we had some interesting inflation reports coming out of China. They're a little bit more pleasing to the market, and better than expected results from the banks, especially when you look at JP Morgan, Citigroup. And we also have seen some upbeat commentary about Bank of America and even Wells Fargo, even though they missed on portions of it, and obviously with the headlines that are coming across with the CEO resigning, the new CEO and so forth, and still a lot of uncertainty on how that's going to play out. Now the S&P, it was up about 0.8% earlier this morning. It backed off. It's basically up about, right now I'm looking at the futures, up about 675, roughly almost about 0.3%. The resistance really is coming in at that 2150 level, so we're going to watch that into the close today and in early next week to see if we can't get above that. But that has been a level that has not been surpassed basically since about 10:20 Eastern time this morning. The sellers seem to have control at this juncture. And really where we see the control gaining some momentum is in the oil sector. As a matter of fact, Baker Hughes came out right before I've come on, and they actually their rig counts are up. They actually increased their rig counts to 15 more, so I think that brings up the total to 596. That has put some more pressure on crude, especially if we're going to have those rig counts start to go online and increase. That means that we're going to have more inventory. That's going to put pressure on crude, which was roughly trading around that $51 mark this morning, and the selling has still continued. Now, we've also seen that the financial sector has backed off. It was really positive after we saw the initial earnings announcements from the banks. It was up about 0.6%. With that being said, it's pulled back. It's off of its best levels for the day, but still holding in there. The other thing that you're seeing here is that there's building strength in the dollar, and that's going to put some pressure not only on the equity markets, but on the commodity markets. The dollar's right now, taking a look at the index, is trading right around, up around 45 cents at 97.97. And that's come back off of what we saw was some pretty decent weakness in the euro. And we're also seeing weakness in the British pound and a higher, broader market. So again, really the inability to not sustain that rally that we saw this morning after some impressive earnings announcements in the financials has really put this market in a muted pattern, especially since right now Fed Chief Janet Yellen is speaking. We're going to see if she's going to give us any more insights into potentially Fed moves, which right now, looking at the Fed funds future and the CME probability Fed Watch calculator, it's only giving around a 59% probability now of a rate hike in December and less than a 9% probability for November. So that's actually coming off of its best levels in December as far as a future rate hike. So we're going to keep an eye on that going into the upcoming weeks. So with that being said, plenty of homework to do. Gave you plenty of names and sectors that you can take a look at over the weekend to measure out your bullish and bearish ideas going to the next week. So get ready for a very spirited week next week, potentially a lot of volatility. So we're going to have some fun. Till then, see you next Friday.